Hi, my name's James Gerrish and welcome to another Market Matters weekly update. Today I'm joined by Shaw & Partners' very well regarded resource analyst, Peter O'Connor. We're here to talk about resources, and I want to start today, Peter, to talk about BHP. I think you're the most bullish in the market. You've got a buy 33 price target. I've got to say you've called this stock very well. What makes you so bullish, so keen on this stock around here?
Thanks, James. Yeah, I am the most bullish in the market, and my target price is $33, which is still some way away from the current price of $27.61 as of today, but I've also got a through the cycle objective of over $40 per share. It sounds ambitious, sounds a long stretch from here, but there are 5 very significant reasons why BHP will get there, and they're quite clearly laid out for that to happen. Firstly, there's some extraordinary parallels to what BHP is doing today and what they did back in 1998, 99, so the late 90s, but also the mid-80s, a recovery, rejuvenation and restoration of the company back to its classic abilities and delivery of earnings and therefore shareholder returns. That's the first step, and those parallels we see starting to feed through now with the new chairman starting and potentially further changes, and that sets the groundwork for the next 4 points. Firstly, focusing on the returns of the existing asset base. In short, we hope the company from here doesn't spend another dollar anywhere else other than its existing assets. To put some context around that, if they make their existing asset base, of which 55% doesn't generate sufficient return, lift that to a level which is regarded to be satisfactory, it would unlock about $1.7 billion in additional earnings, or about 41% earnings uplift from the current earnings base. That's the second point. Thirdly, it sounds ambitious. How do they get there? They've got 4 assets which I deem the crown jewels. 1 in iron ore, 1 in metallurgical coal in Queensland, copper in Chile, and also their conventional oil and gas business. Those 4 assets have been with the company for decades. They will be with the company for future decades, and they're some of the highest returning assets in the mining portfolio globally. The benefit of turning some of those around and just lifting them to an average margin through the cycle will help support that previous comment I made of that 41% earnings uplift. And just to give you an anecdote to show you how simple it can be, in iron ore, where they're actually generating substantial returns today, if they take that business and benchmark Fortescue, which is its next door neighbour in iron ore, if they take their business and meet the target of cost of that company, that would take their cost down to $10 to $11 from their current $13 to $15. That alone would unlock about $750 million of additional EBITDA for the company, or about 10% net profit growth. That sounds to be a reasonably a doable objective, particularly because the company is located side by side, and a straight benchmarking operation should be quite straightforward. So as an anecdote goes, that should be fairly straightforward. The next point is about capital management. What does BHP do with the earnings, the cash that they generate from here? And it will be a sizable amount of cash. They will continue deleveraging, and that deleveraging story is well advanced. It's now down to a level where they can start to think about giving more cash back, which dovetails well with what they could do in asset sales. And there's about $10 to $18 billion worth of assets that we think could be sold over the next 1, 2, 3 years, starting with shale, which is the most talked about in the market. And that should be sold within the next year, and we understand overnight there are already 2 offers out there, or potential interest being shown, so it does feel like it will be contestable in the price, a fair price at least. Those proceeds will go to some deleveraging from here, but more importantly to returns to shareholders. We see BHP initiating further buybacks, special dividends, and potentially lifting their ordinary dividend as well. So they'll become quite a substantial capital management story. Lastly, and most importantly, resource stocks need tailwinds. And right now we've got tailwinds across the board, whether it's global macro environment, which is supportive, and importantly it's looking to be all major economies are moving together in a synchronised way, which we haven't seen for at least the last 5 to 8 years, and that's underpinning commodity prices, which are moving towards 1, 2, 3, 5-year highs, and that's driving BHP's earnings. And to suggest to how much upside there is just on those tailwinds, if I ran my BHP financial model today based on current spot prices, my earnings would be over 100% higher than they are in my current forecast. Again, substantial upside, which means more returns for shareholders. Wrapping that together, that's the thesis that I have, which delivers $33 in the next 1 year, and also that $40 or above target through the cycle. Now, in saying that, I'm very aware of the tactical moves in the short term. BHP today is trading about $21.61, as I mentioned. It's up 21.9% from June 21. So just in over 10 weeks, it's a bull market for BHP, and we've seen the same last year. And I would just caution in the short term, what we're seeing now is BHP is making a fresh new high. We think there'll be some consolidation in the short term, but we're definitely a buyer on any dip. We think it'll make a fresh higher low from here and start to move towards those 2 objectives of 33, then $40 and above from here.
Comprehensive, Peter. So, I mean, in our own positioning of BHP, we've trimmed some off the table in the last week or so, holding the remainder, but we will be sellers above $28. That said, we'll be buyers of dips, which fits into your thesis. I want to move over in the gold space now. Gold's obviously been running up in the last couple of weeks. We've got Newcrest in the portfolio. A very quick, short, sharp view on your gold exposures. Is Newcrest a buy here?
Newcrest is a buy here, absolutely. It's one of my 3 key picks in the gold space. A little bit of noise overnight, James, with the WA government lifting our royalties in the gold sector. However, Newcrest is one of the least exposed. Less than 1% of earnings impact from here, so a little bit of noise. But Newcrest offers a little bit like a mini BHP story. It's a restructuring. It's a company which hadn't delivered for about 10 years prior to the new CEO starting 2 years ago. And that unlocking or rejuvenating of the company's value has only just started to begin, and it's manifest particularly at their Lahir gold asset, which had been struggling for nearly 2 decades, and they've started to lift that substantially. Clearly a gold price tailwind, which we're seeing at the moment, helps, but operationally they're one of the lowest cost of all the major global companies as well as the local companies. They've got production growth in front of them as well. And the company's delivering. That's the other thing. They meet guidance now every time. In the last 9 quarters in a row, probably the first 9 quarters ever, the company's delivered on guidance. And that's important because you want consistency and deliverability. And they're also deleveraging. Whilst they do have debt, they could be net cash in at least, less than 18 months from here. So they'll also be a capital management return story as well, having just restarted their dividend for the first time in 3 years.
Yeah, that capital management story is what we've been seeing in this reporting season. So generating a lot of free cash flow, paying down debt, increasing the likelihood of dividends going forward. What else in the resource space is catching your attention? Nickel's been pretty well supported in recent times. Are there any other key picks in that area that we should be keeping on the radar?
Aside from what we've just talked about, the area that really stands out are the base metal complex. That includes aluminium, copper and nickel, and those stocks within that, they've been the laggards both from an equity perspective, but the commodities yet haven't moved, as we've seen in what I call the Rust Belt, coal and iron ore, and also gold, which had moved higher previously as well. So it's the commodity to move next which will drive that tailwind, should lift those companies higher.
So we're talking, just to be clear, alumina, Western Areas,
Independence, Oz
Independence
Minerals.
Group, Oz Minerals. Thanks for joining us today, Peter, in the overview of the commodity complex. Clearly, BHP is kicking some goals at the moment. We're always conviction holders of particular stock, so we will be in and out over time, but the trend is clearly your friend, and that is going higher. Bye for now.